So this is a large rental deal. This is a property we bought in Lancaster, Pennsylvania, and this is a property we bought in Fayetteville, North Carolina. Equity, large rental deals, is pooling of funds from numerous investors and channeling those investor funds into real estate projects. This is a fancy way of something. This is a big word that a lot of people like to throw around on bigger pockets and stuff like that. This is called a syndication. Yeah, this is when they say, people say, oh, I'm a syndicator. Okay, so syndicating means that getting a large group of investors together and buying a larger asset than what they could most likely afford with their own money. Okay, there is a legal step you've got to take to form these type of companies. So some legal hoops you got to jump through. The SEC can get involved in these types of deals. Okay, and so what's great about them is it enables you to buy, it enables you, if you play your cards right, to get a group of investors together and buy this. This is a 49-unit apartment building. This is a 198-unit apartment complex. Okay? Do you think I did these, I put these deals together out of the goodness of my heart, or do you think I made a few bucks when I put these
goodness
together?
Goodness of your heart.
Right. Yeah, it's charitable.
Good
right. So it's a hobby. Right. So, now, we took a chunk of ownership in this building and in that building, right? And the ownership that we got was not linearly directed to the amount of money that we put in. Some of these two we put in nothing. Some of these two we put in something. But I got this much in exchange for this much money that I put in. But I put in what? Sweat, contacts, time. Right? Sweat, contacts, time. I didn't figure out an acronym for that. If you guys think of one, let me know. You know. But that's what I brought to the table. Okay. I also had to personally guarantee the loan on this one. Right? That's something.
So you didn't put money into one of those?
One of these, yes. Value added deal. This is this on steroids. This is you have from a bigger picture, you ever watch a Burr deal? You know? Okay. So a value add is a apartment building Burr. Okay? This is the way you really, really smack an equity deal out of the park, and you make a lot of money for your investors that come alongside you, and you can make a lot of money for yourself too. Okay. Again, this is investing 202. Don't be running around telling people you want to go do deals like this next. This is what you should strive to do after you've done a couple of deals and qualified yourself, that you can go and start doing apartment building projects. Okay. That's the lovely, lovely building we bought in North Carolina. That's one of 23 buildings at the 198-unit complex. Just one building in the whole, like they're all together, but connected by a road. But that's like an 8-unit parcel of the complex. Okay, you can see it's kind of not inviting, you know, not very pretty. So we turned it into that. Okay, put window shutters, put paint, did some landscaping, did some roof trim, resurfaced the parking lot, restriped the parking lot, did some, you know, redressing of the interiors and everything like that. I also invested around $6,000 a unit on interior renovations, doing cabinet refacing, hardwood floors, carpeting in the bedrooms, putting in new fixtures on the lights and new fixtures on plumbing. Right?
6,000 per unit.
6,000 a door. Yes. And a lot of times 198. But the bank loaned me 100% of that. Yeah. So we don't have a dry erase, do you?
Don't have what?
Huh? Oh, yeah. If you don't mind, if you can run quick. I was going to write some numbers up here, but I'll off the cuff, right? I'll freehand it. The rents on this property were on average around $550 a unit when we bought it. Okay, so through upgrading the interiors, doing the exteriors, making it a nice shinier apartment building that people were proud to live in, and we also added a bunch of amenities. Added 2 playgrounds, a dog park, 2 grilling stations. 3 grilling stations. A lot of cool features that make people like want to live there, right? And so we increased the rents on average about $140. You got a calculator, Sam? You got a calculator? Get your calculator.
700.
Huh?
We'll say 700.
No, yeah, I know, but I'll give you. I'll make it easier on you.
Go for it. 198.
Yeah. So take a rent bump of $140 a unit.
So 198 times 140, you said?
198 times 140. What's that?
27,720.
$27,720, right? That's how much additional money on top of the top line rent roll that the property made per what? Month. What's that times 12 times a year?
332, 640.
$332,640. That's how much money the property made in addition to on top line rent roll per year in rent. Okay, now divide that number by 0.07.
So the property over there, you're treating as a 7 cap.
4,752,000.
Okay, I am assuming that that's what the cap rates will be in this market by the time we get around to a refinance. So I'm being conservative. It's not a 7 cap right now, it's like a 6. The market's a 6, right? But this will probably be a 7 cap. Again, shiny nickel could chase that one, but bottom line is because interest rates are going up, the way a cap rate is how properties are, about properties like this are valued. Again, don't let somebody talk to you about a single family home on cap rate. This is what gets valued on cap rates, okay? So if the cap rate goes up, that means that, I mean, yeah, value technically goes down, but if I'm doing a big value add like this, I'll be able to kind of ride the wave. So $4 million, right?
Yep.
Okay, so the total of $1.7 million to do all these renovations. So I spent $1.7 million in renovations, all financed by the bank, by the way, okay? I created $4 million in value, okay? So the way you play this game, guys, is you do this work, then you refinance the property and pull some of that value back out, and I can give it to my investors back. I can give them a chunk of their money back, right? You can either structure that as a buyout, or you can structure it as a partial return of capital because it increases their return on investment. And by the way, when I pull this off, if I give investors a big chunk of their money back, what do you think they're going to do with it?
Put it right back into you.
Right. Yeah. Right. Because I did what I was supposed to do. I was a deal provider. You know, I did mine. I held up my end of the bargain. You know. Right. Got it. Value add. What's up, Carwell? Oh, sorry.
Which came first?
Chicken or the egg? Right.
Yeah. Were you attracted to the market and then you look for deals, or were you looking for deals and said this might be a deal? Let me check out the market.
We kind of know what we're looking for, so I don't recommend that you start shotgun approaching it and looking for any deal that's that's at your price point, any market in the U.S. We started looking in specific markets, then we expanded into specific regions. So we were shopping in the greater Raleigh, North Carolina area. This is in Fayetteville, okay?
So first the market. You recognized
Yeah.
the market you wanted to be in.
Yeah, but for a building like this, you can't be like, I want a building on 2nd Street in this town, right? No, there's you got to be more of a wider net, right?
Okay.
So I don't recommend people say things like, I want any deal on this side of the Mississippi, you know? You got to be a tighter net than that. Then once this deal came up, then we started researching the market and made sure that the market made sense for what we wanted to do, made sure there was jobs, made sure there was an economy, made sure that this deal checked all the boxes we wanted to check. Local crime, we talked about crime maps and stuff, that we did that too for big stuff. By the way, go to Trulia. Trulia has the best crime stats out there, and it's free. So just act like you want to buy a house around where the apartment building, around where the investment deal you're looking at is, and they'll show you local crime stats if that's something you're concerned about.